Hey people, welcome back to the Investor. This is Angelina, and today we're going to talk about the relationship between inflation and an investor. So, in our earlier videos, we talked about about the investor versus speculation. So, let's hop onto the video. Before we go on to the topic, first we have to know that what is inflation. So basically, inflation is nothing but the rise of prices over over period of time. So let's take an example. At the year 1990, take an example about 1990, the price of gold was about 2% of inflation, and in 1995 it was changed to 4%. So we conclude by saying that bonds are undesirable in nature and stocks are desirable for investing. So basically, it is important for the listener to understand that stocks are better than bonds. So let's consider an example, a simple example, that in the year 1915 to 1920, the stocks were about they were doubled, and during 1965 to 1970, as compared to the year 1915 to 1920, the stocks were increased to 15%. So as we see the annual rate and all, it was increased from 2%, then to 4, and then at the year 1970 it was increased to 15%. So the stocks were, so during that period of time, the stocks were declined 3 times. Basically, money is an illusion. So let's take an example, or consider one example, like another example. So if you have 2% of profit, and then the inflation rate is 4%, it's pretty obvious that you'll feel happy at first. So, and if the profit goes to 1% and the inflation goes to 6%, it's pretty obvious that you won't feel good. So the thing is that money, like the downfall or the growth rise of profits, is an illusion. So the thing is, whatever you expect or whatever you think is gonna happen, it actually doesn't happen. So like whatever can happen, you can lose your money like in a fraction of seconds. So the thing is that you have to be patient and be very brave. So now let's take an example for negative inflation. So basically, let's take an example of the past. So before the year 1989, Japan was quite strong in economy and all. But after 1989, Japan became one of the weakest economic countries because of the downfall of prices. So let's consider a present example. So now India, let's take an example of India. We see that for this COVID-19 or coronavirus pandemic, things have changed and the stocks are going down really quick. Many people lost their jobs, and now India has also become one of the weak economy countries and all. So today we got some sort of idea about inflation versus investment. So I hope everything gets fine in India, and India gets back to its place. So thank you guys for watching this video. Don't forget to subscribe our channel, like and share. So bye bye. See you guys on the next video.